Good afternoon, everybody. Welcome to this week. And well, what a week it has been. Holy banana bread. We're here. Lots to talk about. We got news. We got a Black Swan event on the weekend as well. We're going to touch on that a little later. Oh boy. It's going to be a great show. It's going to be a great show. I want to do something a little different this week. So normally I give you guys a chance to earn a market close. So in light of the fact that we had a Black Swan event, and there could be a little bit of an impact on the market tomorrow morning, I thought I'll give you guys a chance today to earn a market open. So a market open for tomorrow morning, same old thing. By the end of this stream, if we got 4 supers, we're doing a market open tomorrow. It would start 15 minutes before the market opens, and we get to ring the bell for the market open. So it'd be kind of cool. Yeah, I think it'll be fun. So we'll hopefully do that. That would be I think that would be great. Okay. Quick little mention about Blossom. So Blossom is that social media app that is designed for, well, investors. So definitely it's a place to go to talk to like-minded people, share your portfolio or not, or share stock tips, or just talk about stocks or finance in general. I'm over there. You can follow me especially if you use my link down below. Click on it, download the app, follow me over there so I can see what you guys are doing. And I get notifications, and I certainly would love to leave some comments on what you guys are up to over on the Blossom. All right. And there's already a whole bunch of you in the chat. Let's just jump in. Let's see what you guys are up to. All right. Here we go. Jonathan, first in the house, last day of his vacation. Am I late? Not today, but I'm back to work tomorrow. Oh dear. Well, hopefully you have an easy day. Hopefully your first day back is easy. I know anytime I've been on vacation, usually my first day back is basically sorting through a mountain of email. That tends to be what happens first. Meow was in with a hey everyone. And we got Bismarcky saying happy Sunday all. Good vibes in the building. Happy Sunday. And we got a Prairie Investor. Good afternoon and happy Sunday, everyone. Beautiful day here in Winnipeg. Yeah, here in Ottawa, it's a nice day if you like humidity. I think the humididex is up around 35, 36, somewhere in that ballpark. So very hot day out there today. Carl's in the house with a hello all. And we got Mary. Mary's in the house with a happy Sunday. And you guys know, if Mary's in the house, you gotta hit that like button because she'll call you out later. She'll call you out. I guarantee it. King of Day is in the house. Hello. Good to see you, King of Day. Good to see you. And we got Terry Crow with a hi, gang. Awesome. All right. So let's hit our first news story. You guys are a little slow off the start today, which is giving me that opportunity to get story number 1 up and running. So, all right, let's, whoops. There we go. All right, there. Everything is working. So the big news in the week, outside of the Black Swan, which we'll talk about later, was, of course, the U.S. inflation. So we had 2 reports coming out. The first report that came out was on the CPI. So the CPI, the Consumer Price Index, that was released for June, and it was good news across the board. So our CPI was estimated, their CPI was estimated to come in at 0.1%. Well, it came in at negative 0.1%. That's fantastic. So inflation actually shrunk. Year over year, they were estimated to come in at 3.1. They came in at 3. So that's not too shabby. If you strip away, of course, the more volatile elements to get your core, that was estimated to come in at 0.2. It came in at 0.1. And year over year, estimated 3.4 came in at 3.3. That's great. So every category the US did really, really, really well. And here's the funny thing. We were talking on the market close the other day. We were talking about, how we would get an interesting 2 days on the market. And we did. We certainly did. Not exactly the way I think I was anticipating, but we did have a situation where basically this should have been a big green catalyst. So we should have had a couple of big green days. We had them in Canada, but for the US, we didn't. And part of it is just that some of the comments that were coming out from the Fed in regards to the CPI, they indicated that despite movement towards their goal, they're really not in a hurry to cut the rates. And so a lot of people didn't like that. The other part, too, is there was also concerns that some of the lower prices as inflation falls, some of that could indicate the companies will make less money. But I kind of call hogwash on that reasoning a little bit, because if you think about it, just because inflation is coming down, it doesn't mean prices are coming down. It just means that prices are not moving up as fast. So I don't really see that as being a huge driver, but nonetheless, some people were feeling that way. So, we had to sort of look at that. Now, Canadian investors, we're a lot more optimistic. It's like, thank God the US is starting to move in the same direction we are. It means that we can continue our rate cuts and it's not going to cause any issues with the Canadian dollar. At least that's kind of that sentiment, which is cool. Now, we had our second report that came out. So the first one was on Thursday, second one was on Friday, and that was the PPI, so the Producers Price Index. Now, they were, it was a little bit more hot. So they were actually expecting 0.1, and it came out at 0.2. So a little bit hotter. Core was expected at 0.2. It came out at 0.4. So we did see a little bit of a rise on the PPI. Now, the beautiful thing is PPI does not hold as much weight for the Fed when it comes to inflation. The other thing, too, is when we look at the June increase in PPI, a lot of this was actually attributed to the sharp rise in final demand services. So specifically trade service margins. And they actually soared 1.9% from May. And that all by itself, they offset the lower energy prices and some of the goods production prices, which are still falling, which is good. So that category, it actually tends to be a bit of an erratic category. There's a lot of volatility to it. So you have to take that with a grain of salt. So it's actually not that bad. Overall, between the two reports, I'm pretty pumped. I'm pretty optimistic on them. I think they were definitely moving in the right direction. Now, a lot of the market's starting to price in a second rate cut in the US. So it's kind of interesting. We have gone from one price cut priced into two. So as long as, now keep in mind, if things change and it goes back, inflation starts rearing its head again, that could certainly cause a little bit of red on the market, especially if we don't meet expectations. All right. Jonathan says, Mary has a very particular set of skills. If you hit the like button now, that'll be the end of it. But if you don't, she will look for you. She will find you. And she will make you hit the like button. I love it. I love it. That was awesome, Jonathan. Awesome take and parody. I love it. That was awesome. Al Bundy's in the house with a hello. Hello, Al. Good to see you. Jersky says, I wonder what the attempt on Trump will do to the markets. And that is the black swan event I'm talking about. So one thing that will happen, well, we'll talk about it now, I guess. When you have a political black swan event of that nature, what it tends to do with people is a lot of times people will start sort of going, I want to move a little bit of my money towards safer investments. So some things are going to be good tomorrow. Gold. I think gold will have a fantastic day tomorrow as people move to gold. That's the safest investment out there if you think about it. I think it will also help Bitcoin a little bit. And we've already seen that. Bitcoin is now back above 60K. So I do think we're going to see a little bit of movement that way. There will be a bit of volatility in the market. Now, I don't see this as pulling things down big time, but if we do the market open tomorrow, we'll look at all of the different markets before the actual bell, and we'll sort of see what's happening. We'll start with Asia. We'll head towards Europe and the UK markets, and we'll just take a look and see. If we get this giant red wave moving, then it's like, fasten your seatbelts. It's time to hold on. So we'll definitely have to look at that. All right. And Joe says the U.S. tech stocks didn't rally because they have already rallied so much, in my view. Understood. And that's the whole thing. When you get these big rallies, like take NVIDIA, for example, you can only rally so much before you need a correction. And corrections are very healthy. Honestly, I would rather see something rally with a whole bunch of little corrections in there than a straight moonshot, because those corrections are very, very healthy for that stock. Al says the market's going to go up on Monday because of the attempt. That's what we have to see. We have to see how that is going to happen. But yeah, you may get some markets going up. And here's another thing too, just to put this out there. There's a lot of people that believe because this attempt happened, it could actually help. It could help Trump in the polls. Now, I don't know if that's true or not, but I can see how it might. If that does, Trump, of course, is viewed as a more market-friendly candidate. So that could have a positive impact on the market as well. But what I do know for sure is we're definitely going to see some price movement, I believe, on gold. And we've already seen a little bit on Bitcoin, as it has pumped up above 60K. And, and we'll look at this after we'll finish the news and that. We'll pull up some stuff on the other screen and we'll look at all of that. And Jersky was thinking the same thing. DJT stock. Oh, dear. Wouldn't that be funny if this caused a pump in Trump's stock? You never know. You never know. I've seen worse. I've seen stranger things, let's just say. Abalash says, how will fall in house prices affect the markets if it starts to resemble the falls in the 90s? That's the interesting thing. I mean, with the housing market, I don't think we're going to get like a crash in it. Yeah, prices are high. Yeah, and Steven's mentioning just watch the pre-market. I do. Yeah, we'll do that as well. If we do the open tomorrow, we can watch the US pre-market and we'll see what's going on there with some of our favorite stocks and see how that's looking. But yeah, back to the house prices. I think it's going to take a while to bring house prices down. The big issue right now is that it boils down to not having enough housing for the number of people that we have. So at this point in time, it's going to take a while to get caught up. I don't see houses. You may get a little bit of a backpedal, because think of it almost like a correction on the market. I think we'll see correction. We'll see prices come down a little bit, but they're not going to come down big time. At least not while we still have all of the excess population. All right. Al says, let's see, Blossom app is so buggy. I have had to uninstall it 5 times this week because it keeps freezing up on my screen. Oh, wow. And see, I've had no issues, but that's weird. Yeah, definitely weird. Now, are you on Android, Al, or are you iOS? Because I'm on iOS, so I don't know if it makes a difference. But has anybody else? I know a lot of you guys do use Blossom. Have any of you guys been running into the same kind of thing? So just a curiosity thing. All right. Oh, we got one more here before we go to the next story. Al says the Canadian housing market in 2024 and onward will never look like the 90s. There is far too much immigration. Exactly. And back then, they will never be the same. And that's the whole thing. Like right now, we have a shortage. We have people living in tents. As long as that is happening, and it's not, we'll always have people in tents. But when you have people in tents who don't want to be in tents because, they just can't find a house to buy or they can't find a place to rent, things are going to be, those prices are going to stay high. The demand is there. Supply and demand right now, we have higher demand than supply. That will keep those prices fairly stable. I don't think they're going to go up a lot, but they're not gonna come down a lot either. So you're using Android. Oh, I wonder if it's an Android issue. Like I said, I use iOS. I have no issues at all. I've never had Blossom ever crash on me. Funny enough. And Terry says Blossom was all good this week. So, interesting. Very, very interesting. So yeah, I don't know. A 9 says, I'm glad Trump is okay. Yeah, absolutely. I mean, it doesn't matter. Like, that's the way I look at it. It doesn't matter if you support politician A or politician B, but you got to support people, right? You have to sort of say, okay, well, I'm glad he didn't get hurt. I mean, I'm very saddened that people in the audience got hurt. So that's never a good thing. All right, next story. And it's nice. We're getting ahead of the news. Normally we fall way behind on the news. So, that's it's nice to finally be caught back up. All right. So meeting expectations. So Trudeau came out this week and he pledged to NATO that we would hit that 2% GDP requirement by 2032. So currently, Canada, just to put it into context, we're only one of 9 countries that are not meeting our 2% goal. Now, here's the big question. How is Trudeau planning to do this? So there's already some agreements in place. So there is an agreement with the US and Finland to build some ice-breaking ships. I guess they'd be controlled by the military. That's great. That's great. We need control of the Northwest Passage. And with all of the all of the resources up there and Russia eyeing them, we definitely want a military presence up there. We've also agreed to buy 12 conventional submarines. Okay. So the problem is, though, these commitments alone are not really adding up to the 2%. I know that there's also supposed to be a push on recruitment to try to get more people in, and that will certainly help. Now, Polyev, he did come out in a press conference today and said, he says, yeah, he can say that, but I'm not guaranteeing that. So we have to sort of see. I don't know what Polyev's plans are when it comes to the military, but here's the thing. If Trump gets back in and becomes president again, he has already said that he believes anybody in NATO not meeting the 2% shouldn't receive any help from other NATO members. So, there is an incentive. And some countries have actually caught up to that 2% goal after comments like that, because, assuming that, he's got a very good chance of getting back in. So something to sort of think about how it's going to go with our GDP. What do you guys think? Do you guys think there's any chance we can get to the 2%? And here, I guess for me, it's like, maybe if we didn't spend so much money on stupid stuff, we could perhaps start pumping more towards NATO. I think we should meet that 2%, but I think we need to do it responsibly. So we'll have to see. Oh, well. All right. Ian is here and Ian's late. Well, welcome to the party, Ian. Welcome to the party. All right. Let's jump into that next article. Woohoo. All right. So MicroStrategy. Everybody knows about MicroStrategy and of course, Sailor. Now, despite what you think of Sailor and MicroStrategy, they've pretty much set themselves up to be kind of a proxy for Bitcoin. So that is interesting. Now they have so their price has I think it's gone up a lot. Actually, since 2020, when they began to buy Bitcoin, their price has risen almost 1,000%. That's crazy. That's very, very crazy. Now, they have announced a 10-to-1 stock split. So that's going to be very, very interesting. And they said that basically it's going to help investors buying in at cheaper prices because a lot of people say their price is out of reach and they're like over $1,000 a share. So I can understand that. Now, the interesting thing is they announced this before opening on Thursday, and that actually drove their shares up 6% in the pre-market. So people are definitely a little bit excited about it. Now, MicroStrategy, in case you guys have been, any of you have been living under a rock, they've been buying Bitcoin like crazy for a long time. And right now, even though they're a technology company, in many, many ways, they're more of a Bitcoin holding company as they have $13 billion USD on their balance sheet in Bitcoin. They're actually the largest corporate holder of Bitcoin in the world. So that's pretty big. Now, so far this year, with the recovery of crypto, they've actually rose 107% so far. So that's crazy. And here's the interesting statistic. So MicroStrategy has rose 107%. Bitcoin's only gone up 40. So there's something going on there. I don't know. I can't explain the difference between the numbers, but MicroStrategy is pretty hot right now. And it looks like now they'll be a little bit more affordable. So we'll have to sort of see. I don't yet have a date for when the split is happening. So it might still have to go to the board as well. I've just got the cursory information. They did announce it, so it may have already gone through their board. So yeah, good old MicroStrategy. All right, Stephen says, is NATO needed still? Oh, that's a good question. I mean, NATO originally was created sort of in response to sort of like, balancing the power between them and the old Warsaw Pact. Now, the Warsaw Pact is kind of gone away. But is NATO still needed? I mean, I don't think you may not need an official alliance, but it'll still be there unofficially. I think even if you were to dissolve NATO, you're still going to have a lot of the NATO related countries helping each other out. And in a way, and just put this out there, there can be one of the issues, I guess, that you could say with NATO is if one of the smaller members gets attacked, there are articles within NATO that could force everybody else to come into the battle. But, and I'm putting this on the other side, the fact that those are known articles within NATO sort of keeps the bigger countries, enemy countries at bay. So you don't have, for example, Russia moving into Poland. They moved into Ukraine. One of the reasons they moved into Ukraine is they didn't want Ukraine to become part of NATO, because they didn't want NATO on their doorstep. But I mean, nonetheless, I mean, you're still going to have some kind of an alliance, whether you call it NATO or whether it's something unofficial. So, is it still needed? Al would say absolutely. And exactly, why do you think Russia's attacking Ukraine? And part of it was NATO. They don't want now, and it's kind of funny. So we're in a situation where, we're in a war against Russia, just not really in a war against Russia. So it's all this whole NATO proxy where everything's being sent to the Ukraine. So it is kind of interesting. I mean, I'd love to see a world where we don't need alliances because everybody sort of works under, for example, the UN if the UN were effective enough that we didn't need any kind of alliance. So it's kind of interesting. Stephen says, well, I think if NATO becomes too big, nations could see it as a threat. Well, NATO is kind of big. You've got the US. You've got just between the US and the UK, that's a lot of military right there. Heck, you could even just get rid of everybody and just have the US. It's still pretty big. Prairie says NATO formalizes alliance support. Yeah, it does. It does. It sort of creates rules, so you sort of know. That, I mean, that's a nice thing. Like, think about it this way: if you were a smaller country like a Poland, being a part of NATO, makes you feel like you don't have to worry about Russia coming in out all of a sudden one day deciding they want your land, because it's not going to happen because of the repercussions of it. So it does. I think NATO has its purpose. It certainly has its purpose. But I would still love to see a day where we don't need alliances, where countries can just sort of treat each other with a bit more respect. And that might be, in a way, that might actually be a bit of a fairy tale. I don't know if we could ever get there. Humans have not been that good at playing nice at all. So it would be difficult, I think. Maybe once we have AGI and AI starts taking over, they'll probably get rid of alliances, because they'll be like, yeah, it's just AI. We run the world. You guys don't need to worry about that stuff anymore. We'll take care of you. Just do what we say, and everything will be fine. So we definitely have to sort of see where that's all going to turn out. But yeah, so the MicroStrategy thing, though, just sort of the last little thing, I think it's a good idea. And now you'll probably see, because we did see this, if you have the MicroStrategy CDR. So with the NVIDIA CDR, they followed, because NVIDIA did the stock split. Then so did the CDR. So it wasn't, I think I think the CDR only did a 4-to-1, but you'll probably see the CDR for this probably do a smaller one somewhere down the road, probably a month or so. So we'll have to see if you're holding that CDR. I don't know if any of you actually are. All right. And our next story, summer jobs. So we kind of touched on a little bit of the employment stuff last week. And there's definitely a lot of pain right now in the employment market. So here's the thing. That pain is even more so for younger people. So recent unemployment numbers, they're showing that unemployment rate for young people, so aged 15 to 24, it's risen to 13.5%. And that's the highest it's been since 2014. So yeah, it's not a good number. Now, the employment rate amongst university students looking for summer jobs is currently the lowest since, and this is even worse, 1998. So there's a lot of students who rely on that money from working over the summer to sort of help supplement their university. So there's a lot of people who right now are in panic mode, because it's like, I don't know how I'm going to get a job, because the jobs are just, they're not out there. They're not out there at all. Now, biggest reason, of course, we got the slowing economy, and the job market right now, it hasn't caught up to the increased immigration. So as a result, we have pretty slim pickings out there for students. Yeah, very, very slim pickings. And we're in a situation right now that there's a lot of overqualified people taking the jobs that traditionally would be filled by students. And why? Because, well, they need to eat. They need whatever they can get. Some people are out there working 2-3 part-time jobs because they can't find a full-time job. So, it's pretty rough. Now, according to the RBC economist, Carrie Freestone, she said that new graduates who have difficulty finding their first job can basically struggle to hit career milestones further into the future. So it basically starts putting them back. Yeah, I can see that. I can see that. So it's going to be tough. I think it's going to be tough for students this year at least. Hopefully, though, if we do have rate cuts continuing, it could have the knock-on effect of helping the job market a little bit. For this year, though, honestly, it's too late. It's too late for this year's students. But 2025 could hopefully be a little bit better. If not, next year we're we're gonna have another beaver looking for work. So not not too shabby. Jay says, I've noticed people near retirement are still looking for work. Yeah. There's people even beyond retirement. Like my mom is 75, I think. Yeah, I think she's 75 and she still works. My stepdad is like 77, 78, and he's still working. They just don't have that luxury of being able to finally kick up and retire. And I think there's a lot of people like that. I mean, I know when I grew up, grandparents, you hit 65, you didn't work. You basically you basically hung around your house and did all kinds of things and played with grandkids and all kinds of stuff like that. That was your days, but not anymore. Not anymore. A lot of people have no choice. Prairie says the office I work for hired 4 students for the summer. Pretty standard practice for your industry. Oh, good. It's good to hear. I mean, that's the thing. If I, was running a business that hired people, I would probably earmark, especially in the summer, if I have, if I have increased bandwidth, I would certainly look and earmark some for students. I think that's a great idea. Good on your company, Prairie. Good on your company. And Right Corp says NATO is threatened by no one. That's true. That's true. Other than occasionally you get some of that nuclear, saber rattling from Putin saying, I can hit NATO countries, but that's all it is. He's never going to do it. Well, hopefully he never does it. Because that would be the type of situation, if that type of war were to break out, there's a good chance I wouldn't even get the opportunity to report about it. So hopefully not. All right, now let's see. What do you like ZMMK for a cash ETF? ZMMK. I am not familiar with that one. I'm just going to pull it up on the side. I'm not going to bring it up on the thing because it'll mess everything up. But ZMMK, we can certainly look at that a little bit later. Okay, so the BMO Money Market Fund. Of course, the Z should have told me that right away. I'm just going to take a quick gander here. Yeah, it's not too shabby, is it? Let's see. Its regular price is around $49.89. It has, I've got no issues with it. It's also got a 5.029%. I think most of these cash ETFs, they're very, very similar. And a lot of times, and I've mentioned this before, if you're planning to use a cash ETF in your TFSA, so for example, you want to park money into it and then buy when the market's down, fantastic. But the problem is, you're trying to avoid that whole, day trading label. So you kind of, in a situation like that, need a couple of them. So for example, let's say you had cash, you had PSA, and then let's say you had ZMMK. So you could, month one, throw your money into cash, and through that month, you could buy through the month as you're buying things. But then if you want to put more money in, well, you've been buying through the month from cash. So if you put more money in, you're kind of violating that 30-day rule. So you don't put it in cash, put it in your PSA. And then you could still continue spending out of cash and out of PSA. And then the next month, throw your money into ZMMK. Now, by that time, hopefully, cash is empty and your 30 days is up and you can start throwing money back into cash and then do the whole thing and sort of rotate through them. So it's just one of those ways that you can sort of get around having the CRA not look at you as though you're day trading, even though all you're doing is parking cash, right? Because you're at least getting some interest on it. So definitely something that you can do. All right. Right Corp says that's the one I use. Yeah, there we go. John Locke says banana bread in a t-shirt posted that ETF the other day. Also, heyo, been a while. Yeah, I haven't seen you in a while. So yeah. um, so Adrian, the Canadian in a t-shirt, is now aware that we refer to him as banana bread in a t-shirt over here. Nine kind of let him know, and he came over. He actually came over on the last market close, or was it? No, it was the Wednesday market close, and left a comment about that because he's originally from Romania, and I didn't know that, so he confirmed it in the comment. I was just like, oh, cool. King of Day says EQ Bank doing 5% on a new account, notice savings account. Oh, that's not too shabby. Yeah, I mean, a lot of banks, like, a lot of banks will give you some really good entry deals. You always want to look at them though and find out for how long. Now, EQ Bank, I do like them. They're the bank I use, so I have no complaints. But yeah, the 5% is not too shabby. Not too shabby at all. Nine says, whoops, I have 3 cash ETFs in my TFSA, already thinking of adding ZMMK. Okay, so going up to 4. Well, it doesn't. I mean, here's the thing: you're going to get, you're going to get your 5% on each of them anyway. So there's nothing wrong with that at all. Terry says because Canadian Pacific bought Kansas City Rail, should I don't know the rest of that question, but I'm sure hopefully you're still typing right now, because sometimes that happens to me. I start to type something and I accidentally hit the enter by mistake, and part of my question goes up wherever I'm talking to. But yeah, Kansas City, Canadian Pacific Kansas City is, I mean, they're a fantastic railroad. I mean, we'll always just call them CP here because we're just used to that. But they're really good. I mean, they are the only railroad right now that has access all the way from Canada, the US, and Mexico. So they have the 3 countries. CN almost gets there. That's one of the reasons that CN fought really hard to get Kansas Southern, because that would have made them into a juggernaut. But CP managed to do it. So, nothing wrong with that. All right. Right says it's an actual money market fund. Well, yeah, there we go. That is true. All right. We did the summer jobs. What else do we have in the news? Here we go. We got a news about charging. All right, there we go. So, a few automakers this week. So, Toyota, Stellantis, and GM, they're now backing a new EV charging initiative called Iona. So what is this Iona? Basically, it's a venture that plans to build a high-powered North American EV charging network. So they're looking to add 30,000 charging stations across the US and Canada by 2030. Now, I think they're going to start in the US and then move up to Canada. So something interesting there. Now, they're going to, these Iona stations will include both types of major charging ports. So you got the CCS, so that's the combined charging system. And then you've got the NACS, which is Tesla's North American charging standard. So it will have both of those. So you will be covered depending on what car you have. Now, as EV prices come down, the availability of charging stations is basically the next big hurdle. Because a lot of people, it used to be price. And now that the prices are coming down, they're thinking, oh, yeah, but is there enough charging stations? Can I actually get everywhere as I need and still have access to charging? So that's definitely a big thing. Now, Transport Canada, they're projecting that Canada is going to need 460,000 chargers by 2030 just to meet demand. So that's quite a bit more than what we currently have, which is 27,200. So we need a lot more chargers. This Iona initiative will certainly help, but we need even more than that. So definitely something to keep in mind. All right, there we go. Let's see here. All right. John says, what are the rules around holding cash ETFs in your TFSA, if any? They're perfectly fine. You can hold them, but it still comes down to if you sell and then you buy it back within 30 days, it can get flagged by the CRA. Now if you get audited, you might be able to explain that, and they might just say, okay, that's fine, but you don't want to get audited. You just don't. So yeah, I would treat it just like a stock when it comes to buying back. Hence the reason Nine was saying she has 3. I think 3 is a good number to have, maybe 4. All right. King a Day says, what's the main difference between CP and CNR? Okay. CNR is bigger. That's one of the biggest differences. But the big difference is CNR, they have a lot of rail going up into our northern territories, up to where all of our mining and resources are. So CN is kind of the gateway to the north and to our materials sector. And as a result, they're a massive part of the supply chain. Now, CP does not have the northern access that CNR does, but they have that contiguous access all the way to Mexico, which is huge. So they both have some huge advantages to them. And I think as we get more and more into producing our minerals and mining and all of that fun stuff up in the north, that will be huge for CNR. While CP right now is positioning themselves in a spot, like once they get past some of the initial debt from buying Southern Pacific, Kansas City Southern, there's going to be, it's just going to be big for them. I think they're both really good investments. And so a lot of times people say, which one should I get? I'm like, well, there's no reason you can't have both. Let's say, for example, if you're thinking, I want 10% of my portfolio to be railroads. Well, you could always do 5% each, or, you could do maybe 3 3.75 each, and then maybe throw in a U.S. railroad like Union Pacific, for example. They're pretty big. Although Union Pacific does have a lot of debt. So just something to keep in mind. But I think, it's kind of interesting. One of the issues that they had with the railroads in the United States is they had a staffing issue. They couldn't get enough people working. And that was causing a point that they had all of the stuff they had to move, all of the freight and things like that. They couldn't move it fast enough. They had customers waiting, but they couldn't move it fast enough, and that they were losing basically because of that. So there were also a lot of strike issues as well. But I think the U.S. is starting to at least get the railroads into better shape. I haven't seen anything negative in the news lately about them, which is always a good thing. Let's see. You avoid the taxation. 2 different rail companies. There we go. Size is the biggest difference. Yeah, exactly. Size is the biggest difference. Some Ryokan locations have charging stations. Ooh, I knew there was a reason I liked Ryokan. I knew there was a reason. Jay says, say goodbye to your privacy with electric. They want to know where you've been and what you are paying, and will sell the part for tracking carbon footprint. It's yeah. But keep in mind, if you have a phone, they know where you go. Like, for example, if you have an iPhone, they can find out where you've been. It's kind of that whole thing. And I look at it this way, though. A lot of people are like, okay, I don't want them to know where I've been. But I look at it this way. I'm not going anywhere that I would even care if the government knew I was going there. Now, maybe if I decided to get involved in maybe some sketchy stuff, then I probably would have a big issue with the government knowing where I am. Oh, in a case like that, I probably would leave my phone at home, right? And take a burner or something. I don't know. Let's see. Wright says, CP used to be much smaller, but after its acquisition of the U.S. line, Kansas City Southern, it's the only rail line that runs directly across and into Mexico from Canada. Yeah, exactly. And it's contiguous, meaning that you can load something on CP, and it can stay on that train all the way to Mexico. That's huge. That's huge. You don't have to switch providers, sort of carriers along the way. And that is a really big selling attractive point. Terry says, because CP Rail bought Kansas City Southern, should CPKC be looked at as a U.S. holding? Reason I ask is, I listened to a pundit say that, can investors hold too many Canadian companies? Well, technically, I mean, CP is still a Canadian company. They're owned and operated by Canada. Now, keep in mind, you will, if you look at the U.S., if you look at the New York Stock Exchange, you'll find a ticker on there for CP because they are offered in the U.S. as well. So, it's one of those things, but they are a Canadian company. So, for example, their dividends are, eligible. They're Canadian eligible dividends. Wright says, in my opinion, it's now the better buy between the two. Okay, fair enough. Fair enough. And here's the thing. I mean, I like them both, but I think CN will do a little bit better in the midterm, but I think you're going to see, especially once CP gets a lot of that debt controlled, and I think rate cuts will really help them big time. I definitely see them as pushing ahead. They'll never catch CN, but when you look at percentage change, percentage move, they'll be a great investment for sure. All right. AmFast says, if cuts are slow, would sectors like REITs and utilities be slow growing, thus CC ETFs be better, especially yields of, yeah, because here's the thing. If you're looking at a covered call ETF, so I think we're probably talking about RMAX, a slow climb would be great, because you're not getting into that situation where you're losing some of that potential, where it's getting capped. So yeah, that would definitely be the best, because then you're going to get your slower return on the value, plus of course your dividends. So that would be a nice, and you'd hold it longer. So I would love to see that. I'd love to see a slow, steady climb for the REITs for sure. Wright says, no, it's still a Canadian holding as it acquired the U.S. line. It's probably one of the better long-term Canadian stocks as it has such a clear moat. Yeah, exactly. Ian, it is in the house. I'm late. Hello, everyone. And Prairie saying, I believe both railways are good as they service different parts of the market. Yeah, exactly. Exactly. Wright says, true, but the Central American connection CP has is immensely valuable, whereas CN is restricted to the U.S. Yeah, because CN terminates at the Gulf of Mexico. They don't make it to Mexico, though, but that was one of the things. There was a fight. There was a big fight for that. But CN, they weren't able to get past regulators. So Wright says Mexico is expected to be as major manufacturing location. Yeah, absolutely. So Mexico, and just a second, I have a coffee here. Yeah, Mexico is huge. And they're one of these places that will benefit as people move more and more away from China. So you have a lot of cheap labor in Mexico. They can become a manufacturing hub. Absolutely. All right. Wright says, that's what I mean. If I had to pick one right now, CP is definitely the better choice, especially if you keep pushing south. Yeah, that makes sense. Does UMAX have my railroads? I don't know. I'd have to look. Ask me when we're done the news. I can certainly pull it up and then we can see. We can always go into the portfolio and look. Always a fun thing. All right. Let's grab we're almost through the news. It's kind of nice. Like last week, I swear, we almost didn't start the news until the first hour. So TD has done a little bit of housekeeping. Yeah. So what's going on there? So TD, of course, has been involved in that big money laundering scandal, and they are trying to move forward after that. So they have parted ways with their current chief compliance officer. Interesting thing. So she left TD on July 2nd, but we don't know because nobody has released this information, whether or not they asked her to leave or if she just decided to leave. But it's interesting that the timing of this happened right after Canada's banking regulators ordered TD to repair deficiencies in its regulatory compliance management, or RCM. So it's kind of interesting. So in their recent assessment, obviously they got assessed to death after what happened with the money laundering, of course. They found that their regulatory compliance has a whole bunch of gaps in it. So they need to get all of that fixed. They got a little bit of work to do. So anti-money laundering is just one of the regulatory compliance risks that banks are required to manage through an effective RCM program. Now, TD has been undergoing in the States, it has been undergoing lengthy probes by the US regulators and now the Department of Justice for weaknesses in its anti-money laundering procedures. Of course, we've already sort of hit on this before. Most people are thinking that at this stage, they're looking at about 4 billion USD in fines that are going to fines and penalties that will hit them as a result of all of this. And in addition to that, US regulators they can sort of impose limitation on TD's ability to expand in its key growth market in the States. So that does hurt TD overall. It's not a good situation. Luckily, though, nothing new has popped up in regards to this. It's kind of a relief. It's kind of a relief for a change. But yeah, what can we say? All right, we got one last story, and I'm just going to get this out of the way because then we have access to everything else. So give me a second, then I will get back to the chat. Unemployment. So National Bank has come out with a report saying that they expect Canada's unemployment rate to hit or exceed 7% this year if the Bank of Canada decides to be a little bit stingy on the bank cuts, so on the rate cuts. The labor market, according to the report, is gasping for air and should not be ignored because of a fixation on inflation figures alone. So the National Bank is calling for a July rate cut, and they're saying that it should be considered a higher probability outcome, as only a disastrous June CPI report should stop them. But we do have CPI coming out this week, which is kind of nice. Actually, Tuesday we have CPI, and then we have PPI coming out on Friday. So this week it's mostly Canada focused. The US. Well, they have retail sales. Those are coming out on the 16th. So just something to look at. All right. This is fantastic. We are through the news. All right. Let me do this and do this. And whoops, we'll get to your comments, like I said, in just a second. I just want to bring up the other screen. There we go. There we go. Boom, boom. Share. It's there. Okay. We now have access to the other screen, so we can pull that up and answer questions, all that fun stuff. All right. So is UMAX a CCETF? All right. We were talking about UMAX. So let's bring this up right here. UMAX. So it is the Utilities Yield Maximizer. So it is going to be covered call. I can tell you that right before we even look. Is it giving us anything in here? It's not really telling us much. All right, let's go over to, well, you know it. We're going to go to the actual page. So let's bring up Google, UMAX, Hamilton. There we go. UMAX, here we go. Perfect. So this is the Hamilton Utilities. Oh, I should actually bring it up. I should bring it up. This is closed. I don't need that. So this is the Hamilton Utilities Yield Maximizer. And now one question I had was if they have the, let's see here, performance, distributions, documents, overview, holdings. if they have the railroads, and here we are. So 7.5% of their portfolio is CNR. 7.3% is CP. So Kansas City, Kansas Pacific, Kansas City. I don't know why. I thought it was called Kansas Southern. I don't know, but that's fine. So CPKS, they have it. That's fantastic. That's really good. All right. But they are a covered call ETF for sure. Now, I did have, whoops, I'm going to go back here. Oops, actually, let's go back here. I had them up over here as well. And let's just go to the 3-year for now. So this is one that, utilities, a lot of these companies have been struggling, but as we get some rate cuts, this should start turning around a little bit. But for now, yeah, you've definitely, so even though you have, 14.514% dividend yield, your total return is lower. Your total return is much lower right now, but this should turn around as a lot, especially the utility sector. They're going to do a lot better with rate cuts. So just something to keep in mind. All right, Jungle Eddie says, I'm late too, just got to work. Fantastic. Vic says, late battling Sunday drivers and practicing my sign language. Oh, how is that one word coming, Vic, that you know? Is all Hamilton ETFs covered call ETFs? It's a good question. I thought there was one, or I think there's a couple in there that does not have a covered calls on it, but I'd have to go digging. I remember vaguely running into one and saying, oh, that's odd. It doesn't have any covered calls on it. There we go. Yeah. And there we go. See, 9 answered it. I could have just read ahead and saw that 9 answered it already, but that's fine. Did TD's share price drop yet from the money laundering case? Oh, did TD's share drop? That's a cute question. No, I mean that in a nice way. For some reason, when I type in TD, it never gives me it. I actually have to type in Toronto, and then it gives me TD. So yeah, let's take a look at the last year. So you can sort of see now. Part of it is the banking problem itself. So, but we've had some pretty major drops. The scandal, had some bit to do with it. But right now, as you can see, the scandal's not really in the news that much anymore. And they're already starting to do a little bit of recovery on this. So it could very well be that 73 down here when it was at 73.90, that could have been its bottom. So that may have been the best time to buy, but we don't know. I mean, the market can do all kinds of different things, especially if more were to come out, it could certainly drop it down a bit further. But yeah, no, it definitely faced it. But here's the thing. TD has a huge moat. 4 billion USD in fines when it's all said and done isn't going to really hurt them that much. So I think they'll be fine. Prairie says, I wouldn't rule out CNR and CP going into a shared rail agreement like they have in Western Canada, but it will be a while before CP would agree to something like this since they have the advantage. Yeah, I don't see them doing it anytime soon, but you never know. You never know. Jay says, I don't trust the big 3 banks. I keep some in Wealthsimple Trade just in case bank runs happen. Yeah, I mean, I don't use the big 3 personally. I actually use EQ Bank. So, but no, it doesn't hurt. It doesn't hurt. See, look at this. That's what happens. That's what happens. Ian says, going to have some USD coming to my TFSA from SPYI dividends. Any US ETFs you like? Well, there's definitely some good ones that I like. Like if you want to go with a standard one, like VOO, that's your standard Vanguard S&P 500 one. That doesn't hurt. But one that I like, and I've been sort of, let me just pull this. Oh, yeah. I'm going to pull this off the screen here because don't want you guys to see everything on here right now just because, well, of course, anybody who's really ambitious will probably say, oh, you don't want me to see. Well, I'll just watch the replay and pause on that second. I'll see everything. And that's fine. One that I've been liking here is AIQ. Just give me a second here. Let me pull this up here. So I have this in the challenge. All right. Let's see here. All right. There we go. Let's go this one here. All right, we'll look at it for the last year. So it's been doing well. So this here is a AI ETF, and that's fantastic. It has been like it's loaded with a lot of your tech stocks, but I've had a lot of faith in it, and I still feel like AI has a lot of runway left. So I'm pretty confident on AI. I'm looking forward to what it's going to still do. Now, I think in the summer we're probably going to see a little bit more sideways. Probably, well, at least July. But I think in August we'll really start to see things start to pick up again. And as we move into the fall, um, we're at a point like there's a lot of rumors floating around. Like for ChatGPT, for example, one of the big rumors floating around is that they're very, very close to being ready to drop a ChatGPT 5. So that will be huge. So we definitely have to see how that is all going to roll out. All right. Yeah, no, the only reason I don't want you guys to see the 0 to 100K right now is, the next one is rebalance month. And so if you look at it, you'll see what the rebalancing is. And I'll be like, no, some of the surprises, I don't want them to come out yet. All right, AmVas says, let's see, BK will be my only financial sector with 15%. This has TD. Should I reconsider, or please kindly suggest otherwise? So BK, just pull this up here. So BK is a, here we go, right here. So it is a bank core. So it is a split core. And here we go, right here. All right, so they have a really good dividend, 15% here. So, and this is going to be one. I mean, Bancorp, I think when the market's doing well, because where it is a split core, it tends to do well as well. Now you'll see, this is the bank crash, and you can kind of see it's going to be kind of another one of these slow ones up. So when we were talking about how I hoped REITs would be slow, this will definitely be slow. And that's fantastic. I mean, if you do get in here, you're going to get some growth. You're going to get your dividends. So that's not a bad place to be. However, with any split core, I usually say when the markets turn, you may want to evaluate them. But for now, I think we're fine. I don't think we have a incoming bear market on the horizon yet. Let's see. Hamilton has 5 growth bank ETFs. Hamilton versus Harvest ETFs. Which is the better management? That's a good question. I do like both. I like Harvest. I like Hamilton. But one of the things I definitely respect with Hamilton is even with like HYLD, where they had to cut the dividend, they still came back, and they still, in the end, they brought the dividends higher than what it was. So I like that. I do think that Hamilton is well managed. So if I had to choose, I would. I think I would lean towards Hamilton, but they're both good. I think they're both good. How long do you hold your dividends for? Do you spend them on stocks as fast as they come in, or hold it back for a big buy? So it depends on the person, right? In my situation, what I do with dividends is, they just get reinvested. I like to use them for rebalancing, like passive rebalancing. So when I'm looking at my percentages and I'm looking at how much I have in different stocks, what I do with the dividends is, so for example, if I'm let's say for example I'm over diversified in Canoe, well, I'll take those dividends from Canoe, and I'm not going to put them back into Canoe because I'm over diversified, but I'll put them in stocks that perhaps I want to increase my my exposure to them. I want to bring their numbers up a little bit. So I use them strategically that way. Now, with that being said, someday in the future, who knows when, I'll retire. And I probably will never retire, to be honest. But, if I were to retire, at that point in time, I would probably then convert everything over to a income, to basically an income portfolio. And then I would have income coming out. And then, if I needed it, I would take what I need. And that's the thing. Take what you need. So if you have more dividends coming in than you need, well, leave the rest there, reinvest them, because then you just make the problem bigger every month. All of a sudden, it's like, oh no, I got more money to deal with. What am I going to do? That's a good problem to have. It's a good problem to have for sure. Let's see. So Al says, I read you're not supposed to have U.S. dividends in your TFSA because TFSAs don't give out T-slips. And without T-slips, you can't claim foreign tax credits to recover the 15% withholding tax. That is correct. So if you're holding a U.S. dividend stock in your TFSA, that 15% withholding tax on the dividend, that's gone forever. There's no way to get it back. It is gone. So it's not that you shouldn't hold U.S. dividend stocks. It's that I wouldn't recommend holding larger U.S. dividend stocks. So if, for example, if you have something like, actually, let's go back to AIQ. So I hold this in my US TFSA. All right. And it has a dividend. Here it is. Right here. So it's a tiny dividend. It's basically a semi-annual 0.168%. Fantastic. It's very little. It's basically 4.3 cents USD twice a year. So, yeah, the IRS is going to take 15% of that, and I'm not going to get it. And let's just see here. What was it? 4.3 cents. All right, let's bring up Google. All right. What is 15% of 4.3? There we go. So basically, I'm going to lose every year less than a penny. So 0.645 pennies. Now that's USD. So that probably would almost be a full penny Canadian. So I'm going to lose about 2 cents a year. I'm okay with that. I'm okay with that. It's so small. But if I had something that had a higher dividend, like let's say, for example, it was paying me like a couple of bucks because it was a big quarterly dividend, I might be a little more hesitant. In that case, I probably would not hold it in my in my TFSA. So it really boils down to how much it's going to give you. So I kind of look at it that way. All right, let's go big screen here for a moment. There we go. All right. I wouldn't really know, though. I don't have a TFSA. Yeah, it's just the way it works. Because the whole idea, right? The idea, and this is why the TFSA is not included, is because this rule is made so you don't get taxed twice. So because there's no taxes on the TFSA, the IRS taking their 15% is fine because you're not getting taxed twice. And they're okay with that. But now, if you're holding it in your RRSP, they recognize that one. They're not going to tax you. Why? Because everything in your RRSP is 100% taxable when you pull it out. It's all considered 100% income. So it will be taxed. So you're not getting taxed twice by them recognizing that as a registered account. And in your personal account, well, yeah, you have a rebate. They will tax you, but then when you do your taxes, you'll actually do you'll actually apply for a credit through the Canadian, through the CRA, and that way you're only getting taxed once. And that way, actually, and the funny thing is, in that scenario, the IRS actually gets your money and not the CRA because you're getting the credit. Whereas in the RRSP, this is where it kind of equals out, I guess. The Canadian government is getting that tax and not the IRS. So just an interesting way to look at everything. Jungle says, let's see, Royal Bank is a forever stock for me. I am at 23% of my portfolio with all of it in my RRSP. I have been holding since the price was $85. That's not too shabby. See, I don't even know what Royal Bank is at this moment, but let's take a look. Let's take a look, and we can all weep at how well how well Jungle is doing. Oops, that is not what I was looking for. All right, here we go. RY Royal Bank. There we go. So there we go. Look at this. So Royal Bank, $151. And and Eddie's been holding since 85. Now, mind you, all you've added beyond 85, it's probably knocked your adjusted cost base up, but that's not too shabby. That's not too shabby. I have a feeling that your adjusted cost base is probably looking good, especially if you did heavier buying in the lower prices. Al says, when I move back to Canada, Royal Bank will be one of the stocks I will buy. There we go. Terry says, Telestrips mate for life. Nothing wrong with that. I like the Canadian telecom companies as well. So I think TELUS and Bell are both great. Rogers is, they're not bad. I don't like Rogers for other reasons. But I also don't like the fact they have so much debt. Mohammed says, I think Tesla will benefit the most practical applications in our lives from AI. Yeah, well, even Elon has come out and said that Tesla is not a car company. They're an AI company. So, yeah, they're going to benefit big time for sure. 9 says, you get withheld 15% on U.S. interest in the TFSA too. Yeah, absolutely. Yeah, anything coming out of the U.S. you're going to get hit with for sure. Ian says, I've got 1,500 shares of SPYI in my TFSA. See how much withholding tax I pay at the end of the month when the dividend drops. Yeah. I don't know how much you are losing, but yeah. Ambat says, let's see, been looking at non-tech ETFs that are growth and income, and that will benefit with still undervalued cuts, such as discretionary energy and utilities. What ETFs do you prefer? VDY and HYLD seem to be at the top. Yeah. So the big difference between these ETFs, one, VDY is not covered calls. So, you're looking at Vanguard. As far as I know, I don't think Vanguard has any covered call ETFs that I can think of. If I'm wrong, let me know, folks. I would love to check it out if they did. But HYLD. So HYLD, when you look at them, they're not basically investing in individual stocks. They're investing in other ETFs, and then they're writing the covered calls on those. Now, I believe they're all Hamilton stocks that they're investing in. I could be wrong on that, but I think at one point they were investing in some US ETFs too. So now I have to look. I'm like, what the heck? I can't remember who they've got in there anymore. All right, we'll just go back here too, and we'll put HYLD. Because something tells me they had a few stocks like JEPI in there. And all right, let's come in here. Let's go and look at, here we go. All right, so here we go. Oh, no, they are all Hamilton now. I thought at one point they had like JEPI and a few other non-Hamilton stocks. But right now, yeah. So right now they've got SMAX, QMAX, LMAX, FMAX, AMAX, EMAX, HIBAND, and RMAX. Oh, they put that in there. So it's definitely interesting. So they have, and they've also got some leverage in there. So 25%. So just something to keep in mind. Now, if you want to know exactly what stocks are in there, unfortunately, I don't think they break it down here. You'd actually have to go to each of these. So these here, for example, are the U.S. Equity Yield Maximizer. Now, let's go down a rabbit hole. Let's go to SMAX. So then if we went to SMAX, there we go, SMAX Hamilton. All right, let's take a look inside here. So these are going to technically be in HYLD. So in this case, you'll actually see you've got everything from NVIDIA, Broadcom, Apple, Eli Lilly, Tesla, Alphabet, Adobe. So you get a general idea. So you would have to pretty much go to each of those to sort of see what's what they're holding if you really wanted to break it down by company. Okay, so SPYI pays 50 cents USD a month per share. Okay. So that I don't have the calculator up anymore, do I? Oh, well, we'll do it anyway here. All right. All right. So if you're getting, let's just say here, you're getting 50 cents, 0.5. Oops, not just what here. Okay. Let's put here 15% of 0.5. So basically, every month, then, if you're getting 50 cents, you should be losing 7.5 cents every month. Now, in this case here, so 7.5 cents, you could times that by 12. Where is my times 12? And that basically works out to 90 cents a year. So you're losing almost a buck every year. If you're, holding that in a TFSA. All right. Al says, now, mind you, I was doing it per stock, not how much for everything, per stock. So if Al did that calculation, then maybe 1350. I don't know. I don't see the total value that you have there. I meant per year, $112.50 per month. So it's all about Regeneron, but people have no clue. All hail the magic mouse. Let's see. Big BFC spike happening. Interesting. Anyone is buying Broadcom Monday at the split. Oh, BTC. Well, is BTC spiking? Let's take a gander at that. Yeah, here we are right here. And I'm going to refresh this because sometimes it can get stale on the weekend. That's not what I wanted. Come on out. Oh, that's Tesla. I refreshed it. It threw me on Tesla, but here we go. Yeah, so I mean, Bitcoin, this pretty much right here, this was the Black Swan event of the weekend. This was the initial part right here. We went up and we've been sort of moving pretty much up since then. But that's one of the things. People, when there's uncertainty like that, they do move to safer. And it's it's funny to hear that Bitcoin is considered safer, but it is in this case. All right. Al says, why not just buy and own the stocks directly if you are buying VDY? Save yourself the 0.22%. One of the reasons is I think a lot of people don't want to manage that many stocks. Plus, you're going to get a lot more just diversity from using an ETF. So there is that reason. So that's one of the reasons that they're very, very popular. You don't have to worry about it. You can sort of set it and forget it. Now, especially if you look at something like VEQT or XEQT, I mean, they have a crazy number of stocks and diversity that you're not going to get if you're just buying individual stocks. Now, personally, I like the idea of, grabbing sort of a mixture. I like a mixture idea. Now, another good reason, too, is let's take, for example, tech stocks or AI stocks. So we looked at AIQ. So if I'm sitting there, and this is a question I get a lot, which little AI stock or what AI stock is going to really blow up the most? And it's like, I don't know. I don't know which one will. I mean, I have a lot of faith in like NVIDIA and the big ones. But by going to an ETF, I'm leaving it up to them. They're going to basically find the better ones. And when one's not performing correctly, once they do their biannually rebalancing, they're going to pull that out. And put something in that's better. So that way there, it sort of means I don't have to do the guessing work. And, and if they're wrong with one of them, that's fine. The others are going to make up for it generally. So it does create that extra level of safety in that case there. Eddie says, with drip average cost of $77.66 for my RY. Ooh, nice. You guys have all got some good banks going here. Mario says, I like both EATS VDY and HYLD. All right. I have it already. ETFs. Nice AI. I'm slowly getting caught up. I'm slowly getting caught up. Oh, I can see the bottom. Ha ha. Jay says FEQT. That's right. The Fidelity one as well. Have some Bitcoin exposure, and it's good all-in-one ETF so far. I like that it has some Bitcoin exposure, because you get a lot of people. There are a lot of people out there that think, like there's YouTube channels about people who only invest in XEQT. And it's almost like a cult in many ways. I think it's a great ETF. I just wouldn't personally go all in on one just because, if something were to ever happen to that one ETF for some reason, it would really suck to have all your eggs in that basket. Not to say that that will happen. I mean, these are good companies. I'm not worried about Fidelity going out of business. I'm not worried about Vanguard. I'm not worried about Global X either. I mean, it's just so Al says, let's see, I use the default calculator in my computer that Windows provides, and I pinned it to my toolbar. I use my calculator a lot, especially when I was playing World of Warcraft. Yeah, no, that makes sense. Now, here's the funny thing, though. I normally use my phone, but my phone right now is busy. It's acting as the camera for this, so I can't use my phone. So I was just like, what am I going to do? I'll just go to Google. And that will do. I mean, I could have also picked up the iPad. I think I've got a calculator app on it. 9 says, I would rather buy VDY than buying duds like AQN. Yeah, absolutely. I would, if somebody offered me, $1,000 of VDY or $1,000 of AQN, I would pick the VDY for sure. Amvest says, when retired, if low income, would it be better to hold U.S. dividend and CC ETFs better held in the RRSP? Well, here's the thing. Yeah, I mean, if you have low income, right? Depends on how low your income is, because you have to sort of look at thresholds, how much you can pull out. So if you have, let's say you put a U.S. ETF in there, so you're not paying taxes to the U.S., but you're pulling out those dividends. So let's say you're getting $2 a month in dividends. We're just picking that just because we can work with that number. So, and let's say you have let's say you have 1,000 shares. So that would be 2,000 a month in that one. So if that were the case, you have to realize that 2,000 is income times 12. So that right there is pretty much going to put you in jeopardy of a GIS if you're on that. So you always want to be doing the math. You want to sort of look and say, okay, if I start putting it in, because I have low income, if I put it in here, you have to look at how much extra money is going to come out that you're going to pull out. Now, if it's a situation where you don't have to use it, you could certainly do that. But at the same time, if your TFSA is not full, there's no reason to be putting stuff. I guess in this case, it's because it's a U.S. stock. You're trying to avoid losing that 15%. You could do it, but just do the math, because you want to make sure that you're not accidentally pushing your income up. Now, the best thing about that, though, is that you do have control. Even if it's receiving more income than you have the math to accommodate, you don't have to pull all of it out. You could just take. So, for example, if you, let's say you have a window of $5,000. So if you can take $5,000 without any tax ramifications, then you could take 5,000, out through the year. But then you would stop at that 5,000, because at that point, if you go any higher, you're pushing yourself above a threshold, and maybe you're affecting the GIS or some other supports. So just something to sort of think about with that. Sammer sold all BNS and bought BTCC.B at 1080. Yeah, a lot of people are, and look at this over on the side, by the way, just in that little bit of talking, Bitcoin is pumping a little bit here. As you can sort of see, like every so often, I notice the green moving a bit further. So I'll leave that up there for a second. You guys can just sort of watch and see if it really absolutely explodes right now. I'd love to see it explode over over tonight. Come in tomorrow and it's like 70K. That would be fantastic, but we'll see. Sold all my AQN, no regrets. Yeah, I hear you. Ian says, I guess 15% withholding tax is not bad because I will be paying more than 15% when I pull it from my RRSP. Yeah, Exactly. That's the one thing that sometimes people are like, "Oh, I don't want to pay any tax," but you're moving it into your look at Bitcoin going. You move it into your RRSP, and all of a sudden, it's like, uh-oh, what's going on? Yeah, Bitcoin's moving a little bit. Let's see if it gets to 61. We'll get, and here, you know what? Just to make this a little bit easier, you watch. Now that I'm going to do something, it's probably just not going to move. I'm just going to put in here we go. I'm going to put in a little bar right here. I'm just going to put it like right here. Here's the price of Bitcoin right now when we're talking this second. So that way there, you can sort of see if it's gone down or up in the next little bit. So we can certainly take a look and see how that goes. All right. Repic says, what growth ETF would you recommend? I have some XUU in kids RESP, and it's been doing well. Well, Redkick, lucky for you, I just recently did a growth ETF video. I believe. Let me just see here. I'm going to see if I can. I'll get the link for you. Something you can check out after the show. It's got a couple of good. I think it's got some ideas in there for you to jump into your due diligence. All right. Where is it? Yes, here we go. Just a second. I'm going to grab a link. Here we go. All right. I'll drop this link in here for you. Definitely check that out after the stream, but there's definitely some really good ideas in there. So when it comes, and I always say this, so when you're looking into the RESP, right? One of the things you want to do, you've got time, depending on how old your kids are. So you kind of want to play it a little bit safer for one, because you don't have, as you get closer to when their age is ready, so when they're ready to start going to school, that's when you want to really have a more of a conservative portfolio because they don't have the time to wait it out. It's not like they're ready for first year university and you're like, could you hold off for a year? We went into a bear market and kind of had some sketchy stuff in your RESP. So you kind of want to play it that way, almost like when you're thinking about your portfolio moving towards retirement. You kind of want to play it that way. But in this case, you don't want to be moving towards an income-based as they get to school. Not to say if you find some good ones, you could certainly do that. But I think you're on the right track with some solid growth ETFs. Oh, look over there. Bitcoin crawling up again. Here we go. Pull this out a little bit more. Here, I'll even, just give me a second here. Let's make it all a little bigger for us. There we go. Just so you can see it better on the screen as we watch a pump in the world of the king of coins, the Bitcoin, just creeping on up. Gotta love it. Let's see, Dow 50,000, SP 500, 600, and CSU 5. Yeah, Constellation Software. There we go. You're calling it. AmVast says, found CIFR Cypher Ming when searching top analyst BTC sector via chat. Appreciate your thoughts. Let's see, Cypher Ming. I don't think I've heard of that one, but let me take a look. I assume that's your ticker, CIFR. Take a look here. Oh, Cypher Mining. Okay. Here we go. U.S. mining company. Now, right now, all right. So all mining struggled, so that's fine. But they are starting to creep up a little bit. Now, this is a pure growth stock because you'll notice that there is no dividend on this one. 468. I want to check a couple things here. Let's go into the key data. All right, come on, scroll up. Here we go. Their debt to equity ratio is 0.04. So it looks like they haven't been profitable for long, but they are profitable. Which is good news here. But I am still missing a fair amount of data. And sometimes with small companies, you will run into this. But so far, kind of like just looking at it initially, I'm not excited, but I do see potential. because this is a sector that will be doing, I think it's going to be much more important going forward. But I'm just wondering here. Let's see. Oh, Bitcoin mining. All right, let me change my mind here. I saw mining, I'm thinking gold, right? I'm thinking gold, silver, earth, shovels. Yeah, yeah. All right. So it's a Bitcoin mining company. Okay, okay. Fair enough. Fair enough. Yeah, here's the big thing right now. Right now, Bitcoin mining companies, until we get that parabolic move in Bitcoin, which of course, just going back here, is still, until we get that big pump in Bitcoin and the price goes up permanently. And I'm using the word permanently very loosely. But once we get an overall big pump in Bitcoin, that will make these mining companies do a lot better. Right now, they're in a situation where they're doing the same. For the work they're doing, they're getting half of the Bitcoin that they were getting because of the halvening. So that, of course, makes Bitcoin less, less plentiful. It makes it harder to get. That is why, like we already have, like on a lot of the exchanges, we have a supply shock. We're running out of Bitcoin on some. Now, that was alleviated recently when the German government sold off a whole bunch of Bitcoin. Apparently, they've finished that now, so that's good. But yeah, we're gonna have to see. Oh, now look at that. We're below the bar again. Oh dear. I wouldn't put a lot in it, especially something that has a low price like that. If anything, if I was looking for, let's come back here for a second. If I was looking for a Bitcoin miner, one of the ones I used to actually like was Hut 8. All right. Now, Hut 8, let's just pull them up for the last year. You can sort of see they have done really well. Now, and this is just the last year. Now they were doing, let's go further back. Let's go to 3 years. This was back in back in the all-time highs back in November of 2021. And they've kind of struggled since then. They came down big time, but one of the reasons I used to like them is I used to swing them quite a bit as Bitcoin was recovering. Now, one of the issues though with them is they went and did a reverse split. So all of a sudden, they became worth twice as much, meaning I could only trade half as much. So they eventually they got a little bit too high for me. I just didn't want to be trading them at the price that they were at. But they have been sort of bounding back up. But the problem is you've got the halving. A lot of these miners are going to suffer for a little bit. So I'm kind of, they will recover though. And this is the thing. But to me, it's a little bit of a gamble because here's the thing. We know what Bitcoin has done in the past. We know absolutely what they have done in the past. But that's never 100% guarantee of the future. It means that the probability is that we're going to get a big pump, and that's where you have to ask yourself, like, okay, well, how much do I want to put into that? How confident am I that we're going to get, the pump that we're expecting? And that's the thing. I always I believe being on the conservative side, hedging your bets. So, for example, instead of throwing everything in, I'll have a limit. I'll have a limit that I put in. So I definitely look at it that way. But so this is Hut 8, for example. And as you said, this was Cipher mining. Cipher mining, when we look at it, let's actually do a 3-year. You can sort of see it's a similar situation, but they're on a bit of a slower rise right now. So it is cheap enough that you could probably throw a little bit of money into it and sit back and hope all of the, actually they call that hopium, have a good amount of hopium that Bitcoin follows what it's done in the past. I think it will. But I'm not 100% that it will. And I always like to hedge things. I would rather, and honestly, miss out on a fortune then but still make a little bit because I went into a certain amount. Then take that chance and it go the other direction. All of a sudden, you're not doing so well. All right, now I gotta. All right, thanks a lot. School of Hard Knocks. Is it time to sell or buy, considering the market is all-time high? I get this question a lot. And I love to show this. Let's go to VDY. Here we go. Or actually, no, let's actually do the American one because I want to go to the S&P 500. So when you look at the S&P 500, and this is a good representation of it without actually pulling up the S&P 500, it's been very flat lately. Just a second. I think there's two VOOs. I clicked on the wrong one. I always click on the wrong one. All right. Now, when you look, and we're going to go 20 years. All right. Guess what? All-time high. 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 Crap, I got to wear a mask. All-time high. All-time high. All-time high. Uh-oh, bear market. All-time. Oh, it's a cat. All-time high. All-time high. All-time high. That's the nature of the market. So you're always going to have. So when you're thinking, oh my God, we're always having all-time highs. Well, yeah, that's the way the market works. Things do move up. They will over time. You're always gonna, if things weren't always moving up, people wouldn't be investing in the market. So yes, there's always going to be all-time highs. But when you're looking at it, like, let's actually pull this back a little. We'll pull it back to just the 1 year. So when you do look at it on the 1 year, you're like, okay, look, we've been moving up. But we did have a little correction here, but we've been moving up pretty strong. So it can't go forever, and it won't. There will be corrections, So for example, if this were today, this could be where we're heading, and then switch back up again while we're still in this bull market. Here's the thing: dollar cost averaging. If you're looking at something and saying, I just don't like it, everything's at all-time highs, well, you can always dollar cost average, because then that way if we're here and we go down, your dollar cost averaging, maybe you'll buy here, maybe you'll buy here, then you'll buy here, and then you'll buy here, and all of a sudden you'll realize, oh yeah, we're at new all-time highs. They're always going to be all-time highs, and sometimes people get really caught up on it. And if you're worried about all-time highs, or if there's absolute mania and you're like, I'm just not feeling it, well, there's different things you can do. Dollar cost averaging, best way to buy by far. You can always, there's nothing wrong with taking some profits. And if you want to move them into a cash position, you can certainly do that as well. But keep in mind, if right here you were getting nervous and you went and sold everything and moved it into a cash position, and all of a sudden when things start to get good again, you're like, oh, I'm feeling better about the market. Well, guess what? If you take that stuff that you put into a cash position, you're going to end up with less stock than you had here because it's cost more. Now, you could argue that, well, at least I got a little bit of dividends down here, but you're also getting dividends here depending on what you're investing in. So I don't really put that into the argument so much, but it is one of those things that you have to sort of look at when you're thinking about what's happening overall with the market, and it will continue to move up. That's just, and going back to that 20 year, in 2010, look at that, 2013, 2014, 2017, it's going to keep going up. So I wouldn't get too overly focused on it. But if you have a bad feeling, and this is what I always say, if you have a bad feeling, there's nothing wrong with taking profits. There's nothing wrong with moving to a cash position if that makes you feel better. And you know what? Sometimes you're right. Sometimes you're right, and you move out and you do something like that, and everything falls apart. I mean, look at just look at some of the crashes. Like, for example, if somebody was really smart coming into here and they realized that a pandemic being called was pretty much gonna happen. Imagine if you had moved your stuff to a cash position up here at 300 and well, right now, like here, 309, and then you were able to buy it at 211, buy it back once we've had the big crash. That wouldn't have been too shabby. That wouldn't have been too shabby at all. But not that. I mean, the writing. I mean, funny thing is, the writing was on the wall, but I don't think anybody ever really thought it would happen. They'll be like, oh yeah, they'll just keep talking about pandemics, and yeah, people are sick. It'll be like SARS, but no, no, and we got that giant blip, and you can find that blip on pretty much every single chart out there. It's all there. You can always find it. It's kind of the neat thing. Like I can find 2020. Just show me a chart. Just show me a chart. Emphasis. With U.S. cuts, thus U.S. money weakens. Is it better to buy ETF hedged? Appreciate your thoughts. Here's the thing. So when you're looking at a U.S. stock, you've got a couple of options. You can buy it hedged to the U.S. or to the Canadian dollar, or you can buy it unhedged. So it's basically straight up tied to the U.S. dollar. When you buy it Canadian hedged, it basically means that you're dealing with extra factors when it comes to whether it's time to buy or whether it's time to sell. You also have to then take into consideration currency. So you have to almost, in a way, you almost need to know. I mean, if you really want to know the math, you'd almost need to know what you paid for it in Canadian at the time, like what rate, what was the exchange rate at that time, and what was the exchange rate when you sell, because that will play a little bit of a factor. But now, if it's something that's going up a lot, then it's not as big of a factor, but it's still a factor. So for that simple reason, like I always look at it this way: if the US dollar is going to weaken, that's a good time to be DCAing into your US stocks if you're doing it in US dollars. But you got to keep in mind too, like I said, rate cuts are not going to stop inflation. They're just trying to get inflation back to 2%. So the prices are still going up. They're not going down. We're not moving into a deflation. Now, if we were to go into, for example, a recession, and the US is nowhere near a recession, you can sometimes get deflationary pressures in a recession. And if we were to really go far, and I know Vic keeps talking about 1929, if we ever were to go into a depression, that would be very deflationary on the economy. But I don't think that's something that you have to worry about. Are you using a mechanical keyboard? No, I'm using, I guess I can show it here. It's a Mac Magic keyboard. So it is not mechanical. I actually, it's funny, I tried a mechanical keyboard once and I hated it. Because I had to hit it so much harder, and I was like, but no, it is a Mac keyboard. All right, and Hot 8, yeah, we were talking about Hot 8. Your stamina amazes me. Well, speaking of stamina, we've got, not this Friday, but the Friday after, we're doing an open to close. I will be here for 7 hours. And we'll pound this out. So we'll keep it going. So we'll get to do the market open and we'll get to do the market close. And speaking of market opens, I put this out early. I mentioned at the beginning of the chat, and I know there's a lot of people who haven't been here at the beginning, but if you guys want me to do a market open tomorrow, see what the effects are of the Black Swan event of the weekend, 4 supers by the time we're done, and we'll do that for you. So it is on the table. Now I get up really early anyway, so it's not a big thing. Now the problem is, now the market open would start at 9:15 a.m. Eastern. So for those of you on the West Coast, holy banana bread, those of you on the West Coast, you might have to get up a little early or just watch the replay. So, and here we go. Mary has kicked it off with a super sticker, and let's take a look and see what it is. Because I cannot. All right, here we go. It's a little happy face. Little happy face. All right. And let's get back here and take a look and see. I think the pump. I think the Bitcoin pump is mostly done. Mostly done. All right. Thank you, Mary. Thank you. And Mary's here, guys. I hope you hit that like button. I'm gonna have a cup of coffee while you guys all hit the like button if you haven't done it yet. I did taste a little blue. So thank you. Thank you to whoever did that. Oh, I appreciate it. All right. Now, where was I at? Oh, yes, I was at the stamina right here with Vic. 9 says, at all-time highs, IDCA small amounts, save cash for crash corrections. Yeah, and that's kind of a neat thing. A lot of people will do this. So they'll set up a strategy where they DCA. So, oh yeah, we can do the whiteboard. We can do the whiteboard. I'm gonna switch to my Mac mouse because I have sideways movement. All right, let's just get rid of that from the last one. All right. So yeah, a lot of times, actually, I'm just going to use the pencil because, we'll just say, even though it's red, it's just, that's kind of the traditional movement of the internet. So what some people do is they will set up, and let's go here. Actually, I'm going to do it this way. Let's do a letter. They'll set up a pattern of dollar cost averaging. So we'll say everywhere that's a D is where their dollar cost and average. So they may buy here. They may buy here as part of their dollar cost averaging here, 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 here. So let's just say that's where things lined out. So these people, for example, like 9, that's their thing. So they may take, let's say, for example, they have, let's say they have a budget of, we're just going to say $1,000. It's probably larger, but $1,000 makes the math really easy. All right. And they've got 1, 2, 3, 4, 5, 6, 7. I should have did 10 of these. I'm going to do a couple more. 8. Oops. 8. We'll put one in here. 9. We'll put one down here. 10. All right. So they have, let's say in the year, they have 10 of these planned. So if you're just doing straight up dollar cost averaging, you'd be spending like $100 every time. But in this case, what they may be doing in this strategy is they may be spending half of that. So what they may do is they may do $50 times 10. So that gives them, that's like $500. And then what they're then doing is with the other $500 is they're waiting for these corrections. And we'll just use a different color. We'll use purple. And we'll just use a B. There we go. So what they are probably doing in a case like this is it goes down and they're trying their best to time it and buy in here. So maybe, for example, they set aside 5 of these. Now they only got 4. But if they were looking at that, they're probably spending, if they got 500 and they're planning to spend, let's say 100 each time. So they might, in this case, have spent, 500. Sorry, they may have spent another 400 just doing these little buys. So it's kind of a way that you can create a hybrid. So you're doing your regular dollar cost averaging, but you've set aside, maybe it's half, maybe it's less. Maybe you're like, okay, I'll do it, but maybe I'll put 25% aside. And you're doing that to try to buy your dips at the same time. So it's kind of like I guess we could call it a DCA / buy the dip. There we go. So DCA buy the dip. It's a good strategy, and a lot of people will use it. And then you're getting kind of the best of both worlds. Now, the big thing is, though, sometimes, in this case here, this person was good. They got all of the dips, but sometimes you're going to miss dips. It's kind of that whole thing. It's like, or, if the dip is, let's go back here. So let's say that dip actually went to there before going back up. You may have bought here thinking it was going to change, and you may have missed that dip, but you still did better than the dollar cost average. You still averaged down. So there's nothing wrong with that. All right. JJ's in the house. Hey, y'all, and Candace. I'm just checking to say a juicy hi. I'm currently working, so can't contribute to much laters. There we go. All right. Let's see here. Inflation will continue to go up at 2%. Well, yeah, prices will continue to go up. Absolutely. That's kind of the whole thing. So we're not getting to a point that prices are going down. It's basically, we're just, it's like a car. If you're driving really fast and you take your foot a little bit off the gas, you're still driving. You're still going forward, but you're not going forward as fast. That's basically what we're doing here. All right. Now, let's see here. Thanks for sharing FEQT. Seems Fidelity ETFs are not popular like FCUV. Why is that? And what's your thought since these are more affordable than Vanguard's all-in-one? Thanks. I think it's just, you got to realize Vanguard has a lot of history. Vanguard has been around for a while. Vanguard actually offered some of the very first ETFs. So for that reason, they're just very, very popular. And you also got to look at marketing. You know, it's kind of like if you think about the way industry works, like with pharmaceuticals, you have pharmaceutical reps that go and pay visits to doctors and say, okay, can you push our drug instead of this drug? It's the same thing that happens with brokers and with financial advisors. They get bombarded by these companies. So, you know, companies like Vanguard and things like that. And so the fact that Vanguard has been around, a lot of financial advisors are very apt to recommend Vanguard because, you know, they're used to Vanguard. They know Vanguard. And maybe Vanguard gave them some fancy pens. I don't know. But for that reason, a lot of other ETFs sometimes have to play catch up to try to catch up to the popularity of Vanguard. But, you know, they are getting there. And as people learn more and we get a lot more people who are doing, you know, do-it-yourself investing, it's changing. It is absolutely changing. All right. And we have Mary is back in with a second super sticker. There we are. We're two on the way. I think that was her second one, or is that her first one? Oh, that was her first one. Never mind. That's because I went back. But congratulations. Thank you anyway, Mary. Thank you again. All right. And we got 9 in here. Member for 1 month. Banana bread in a t-shirt. Fantastic. So thank you once again for re-signing. So the channel membership. Oh, by the way, in regards to the channel memberships, we have a channel membership exclusive live stream Thursday night, 7 p.m. Eastern. So right now, if you are a channel member and you have some ideas for what you'd like to see me talk about in the live stream, head over to the community tab. Just drop it. Drop that information. Just drop it there, and we'll be good. We'll be good. I'm gonna get probably a vote up. I think probably tomorrow because we're running out of time. So, and then you guys can vote on what I'm going to talk about. Last time, we talked about retirement from basically age 20 all the way to retirement. We broke down all of the decades. It was fantastic. It was fun. So, you know, be creative, throw some stuff in there. I can't wait. All right. Gene says, how do you think about Bitcoin ETF compared to actual Bitcoin? All right. Both have their advantage. So we'll start with Bitcoin. Bitcoin is fantastic. I mean, I do like Bitcoin. I do feel strongly. We might as well put Bitcoin on the screen as we're talking about Bitcoin. Oh, look at that. It punched through again. It's above the 6,100. Nice. So yeah, I find Bitcoin, I think Bitcoin, you're going to have a lot of great movement on it. That's fantastic. It is a wonderful asset, but you probably have heard things like, if it's not your keys, it's not your crypto. So sometimes the custodianship of Bitcoin is a bit of an issue. And a lot of people don't know about, you know, how should I be using hardware wallets? How does that set up? Is it safe over on Wealthsimple or ShakePay? Why do I have to shake? You know, you got all these questions that happen. And for the most part, I think if you're holding Bitcoin on Wealthsimple, if you're holding Bitcoin on ShakePay, it's safe. You know, I can't give you 100%, but it's at 99.99% safe. It's, you know, they're very, very good in that sense. However, when people start playing with hardware wallets, and especially if they don't know what they're doing and they start losing pass keys and things like that, you know, there's a bit of a danger. There's a bit of a danger there. So you want to be a little bit careful with that. Now, let's go to ETFs. With a Bitcoin ETF, like a spot ETF, you are losing a tiny bit to, of course, the fees on that ETF. But for the most part, it's not that big. Unless you're going to, like, for example, BTCY, which is a covered call version, the purpose high yield one. That's a different story. So when you're holding that ETF, here's the beautiful thing. You have that opportunity to, and this is one of the huge advantages, is you can take that and throw it into your TFSA. You can't throw Bitcoin directly into your TFSA. So all of that growth that you're getting on your Bitcoin, that's all capital gains. You're paying taxes on that. Whereas if you throw some a Bitcoin ETF into your TFSA, you can let it grow as big as you want. And I will say right now, that even if it's a situation where if you grow your Bitcoin really big, so your Bitcoin ETF, let's be clear, in your TFSA, and you decide, well, gosh, I need that money for something, you can pull it out of your TFSA. And then next January, when you get your new contribution room, you'll get that space back. So the amount that you grew it, you still get it back. I mean, they give you the space, not the money per se. But I do like that. Now, another thing I like as well is if you're a swing trader, then or a day trader, you can use the Bitcoin ETFs for swings. It's probably easier to swing trade than actual Bitcoin, for the simple reason that a lot of exchanges have a spread. That's how they're making money. So they have a spread, or there's some fees involved. So if you have, for example, a broker with commission-free trading, then you can react and you can make smaller trades and you can make money that way as well. But what I do love is, like I said, the big advantage is a Bitcoin ETF. You can put it into a tax-sheltered account, not pay taxes. You don't have to worry about custodianship. You don't have to worry about hardware wallets. And you're probably not going to have somebody hacking or trying to get their hands on your keys. So there's a lot of advantages. So I don't know if I want to say, I mean, I like them both, but I see a lot of advantages to the ETF. Yeah, and 9 is mentioning here as well. So cold wallets like Ledger, they had security flaws. Some of them did. And here's the thing, like, some people would buy, and this happened with Ledger. Some basically hacker type people would buy a bunch of Ledger wallets, and they would install their hacking software on them. Then they would repackage them and resell them on Amazon. So anybody unsuspecting would come along and they would buy a Ledger wallet. They think they're getting a brand new wallet. They get it. They're like, okay, let's set it up. Let's get all my crypto on it. Meanwhile, there's a program in the back end that is recording your keys and everything. And next thing you know, they got your crypto. You don't. So you kind of have to, be a little bit careful when it comes to Bitcoin in that sense. Now, another thing as well to keep in mind is that people out there too are trying to scam your crypto like crazy. Oh, there we go. If you go over to Discord, now we have a Discord. There are fake versions of me like crazy trying to scam your Bitcoin. Let me show you. I can actually, because I do have on our Discord, we have a scammer, scammer channel, scammer alert. All right. So here's a fake me. I don't know how well you can see that. I don't think I can get it any bigger, unfortunately. But you will see that it says Mountain Finance. It's got my profile picture on it. But if you actually look at the username, you'll see it's missing a letter in there somewhere. I think it's missing an I. Oh, I don't know what it's missing. Oh, this one has a dot. Extra dot in it. But they will do that. They'll pretend to be me. Now, here's a big thing that you can sort of look at. Like when we look down here, like what is this bento.me Mulham trading? Day trader YouTube. I don't know if that's, I don't think that's in my profile. But member since November 14th, 2023. I've been a member a long time. So that's not, definitely not me, but that's what we have. Like, you know, they pop themselves up and there's more. Here's another fake me. Yeah, this one's missing the I. So Mountan. So they're trying to trick you that way. Oh, here's another fake me. What is this? Now, this is the same one, the first one. It's got that extra dot in there. So they will hit you up. So if you want, like, Discord is awesome. We have a great community over on Discord. If you want to go over there, what I say is reach out to me when you get over there. Send me a friend request. I will approve it. That way there, you know it's me. You know it's me. And I'm pretty sure that if I send something to you, you'll see there's no dots. It's spelt correctly. But yeah, definitely send me a friend request. I will answer you, but I'm probably not going to reach out because, you know, I know the scammers do it. So I'm probably not going to, even if I wanted to, I'm probably not going to do it. Just for that simple reason. All right. Amvas says in Discord, Paul mentions BTC and SOL. So Solana. How would you allocate this in one's 5% portfolio allocation to maximize current situation? Okay. So if you have a 5% portfolio, so let's say you have a 5% exposure to crypto. If you're trying to sort of figure, okay, well, I want Bitcoin and I want Solana. Well, this is where it comes in. Like Bitcoin is kind of, it's like, well, it's the king of kings, the king of coins. It's the top dog. So you probably would want to go deeper into Bitcoin than perhaps Solana. Like I would probably look at something like a 75-25 split, something of that nature. But you can always move that around too. Like, you know, if, for example, Solana is, you know, right now there's a potential ETF, a Solana ETF for Canada. If that comes out, that will be good for Solana. But there's also been talk of a US one down the road. If that happens, then you're probably, and you'll know because there'll be everybody and their dog will be talking about it on the YouTubes. That point, you could be sort of saying, okay, let's start shifting my allocation a little bit. I'll maybe move my Bitcoin from 75-25. Maybe I'll move it to like 60-40 so that I can, you know, I can milk a little bit of this, you know, the Solana ETF and what that's going to do. But always keep in mind, and we'll go back to the whiteboard. Let's get rid of that. And we're just going to free draw. So this is the price of Solana, right? It's coming like this. It's coming like this. All right. Now this straight line, this is the release of the ETF. I should have used a different color, but that's fine. So what's going to happen is everybody gets hyped up to the release. After the release, they always tend to drop a little bit, and they'll slowly evolve and slowly move back up. But this is a playable thing. So if your release date is here, you know, I personally, what I'm going to do, I'll just use a little yellow here, is I'm probably going to sell right about here. You know, and then if I'm, you know, if I want to buy back in, I'll probably buy back in somewhere around here. So I'm going to make that, you know, well, let's make a triangle. I just because I can. So I'm going to ride that down and rebuy in. Now, depending on where it is. Now, if it's in your TFSA, you do want to wait. I always say, even though it's 30 days, you want to wait 31 to be on the safe side. So you want to wait 31 days before you buy back in. But even then, you're probably still in good shape. Now, if it's just buying straight up Solana, then it's not in your TFSA. Then that's a different story altogether. All right. Lisa asks, how much Bitcoin would you personally feel comfortable holding in ShakePay? I've been putting off getting a cold wallet. It does seem like a pain. That's a good question. So at one point, I was holding quite a bit of Bitcoin, and I moved it off to a hardware wallet. So I tended in that situation the only time I would move it to Shake Pay is if I thought I was going to be making a play or something of that nature. But you know, my answer would be look at their insurance. So if they have the CDIC, that would cover them for, I believe they're covered for up to 100,000. So I would absolutely not hold 101,000. I would hold 100,000 and feel confident only because of the insurance. But yeah, anything more than the insurance, I would be, let's say, even if I didn't want to go to a hardware wallet, I could use I could do 100,000 at Shake Pay, 100,000 at Wealth Simple. There's different ways you could sort of break it up, but that's kind of how I would look at it. Let's see. Does Discord require phone verification? I honestly don't know. I'm pretty sure it's just email. I'm pretty sure. I'm not 100% sure because my account, my Discord account, well, let's find out. I'm kind of curious now. Let's see here. I thought there was oh yeah, over here. Hide member list, pinned, notifications, threads. Let's see, inbox, update. Oh, there's an update. Well, I don't want an update. Help? I don't want to go to help. I've been a member for a while. I couldn't tell you how long. Well, let me see here. Edit profile. No, that's probably not a thing to click on the screen. The next thing you know, my home phone number's on the screen and everything else, and I start getting phone calls. It'd be funny. But no, I'm not sure about the phone verification. Do they have? Well, yeah. When you're looking at Shake Pay, so I don't know if I can find it here. Let's just see here. Shake Pay. Insurance. Let's put deposit in here. Let's see. Here we go. What? I don't want to. I don't want to sign in. I just want some information. Shake Pay. I know they do have some kind of security, but let's see. So is it CIDC? Okay, so they're not CDIC. There's another one that they are, but I know they have insurance. I just don't know how much it's for. That's what you want to find out. So let's see here. What is a safe disk? A safe bad? There we go. I don't have the answer, unfortunately, but I will find out. I will find out. So if you come back next stream and ask me, I will know, because I now want to find out. Actually, you know who might know? Let's see. Okay. Does Shake Pay in Canada have deposit insurance? We'll make ChatGPT crawl the web for us. Let's see here. Let's see. So they don't have it by CIDC. Let's see. So they do have a third party due to theft. So, okay, employee theft. Okay. So FinTrack. They're not telling me how much it is. I would definitely. And yeah, their security page. I think I have to be logged into Shake Pay to get any information out of them. But it's not as good as the CDIC. So between the two, between Shake Pay and Wealth Simple, I have more faith in Wealth Simple. But I also, I don't feel like there's ever really been an issue with Shake Pay. But at the same time, it doesn't hurt. There are safer wallets out there that you can get other than a ledger. But keep in mind, they're only safe until somebody finds a way to hack them. But at the same time, even the hedger thing, I mean, no, it's not like a whole bunch of people lost money on that. There was a hack, yes. But, it's just one of those things you have to sort of keep in mind. All right. Okay, back to the big me. We've hit the 2-hour mark. So we're starting to wrap up a little bit here. So if you got the last minute questions, this is the time to drop it. And I know you guys, if you want to do the last minute supers to get that market open tomorrow, now's the time before we go. Now, while you guys are coming up with your last minute questions, though, I'm going to grab a little bit of coffee. Very, very good. Now, I will also very quickly, let's go back to Discord. So one of the things you can find over on Discord as well is our YouTube schedule. And I also keep it as well over on the Facebook group page as well. So we have the Facebook group for the people who don't like Discord, and we got the Discord for the people who don't like Facebook group. I have heard a rumor, by the way. This is fantastic. So apparently there's a beta on YouTube where there's like, you know how we have the community tab? Where there's like a version of the community tab where you guys can post stuff. So that could be really interesting. I can't wait to see what that looks like, to check it all out. So that will be something to definitely look at. But it'd be fantastic. I mean, if you guys can come in and post things on the community tab and get upvoted and everything, and that would be really, really cool. I can't wait. The Facebook link. Sure. Let me see if I can get that for you. There we go. Seriously? Okay. It's I'll explain the link here in a second. All right, here we go. Here's the link. That should get you there. I don't know why it still says Financial Brew. So when we first started the channel, probably for the first 3 months, we were known as Financial Brew because I thought that was funny. Because then I could sort of build a sort of a branding around me drinking coffee. Can you imagine that? But then I really decided I just needed a better name. And now my last name is Mountain. And, this is all about finance. So I thought, okay, that would be a good name. We'll just go with Mountain Finance. And so I did change it, but there's still a couple little things floating around that still say Financial Brew. And that's one of them. But the Facebook itself, if you go on to Facebook and you search Mountain Finance, you'll find us, because it was briefly Financial Brew. All right. There we go. And we got that link out for you. Oh, I was talking about our little thing over here. Now let's pull up my thing. I always do this every week. I get rid of what we just did. There we go. Bang. Bring this one up. Bang. The video tomorrow, it is 5. Let's put it in here. Oh, sorry, it's not tomorrow. Well, if you're a channel member, you do get to see videos 1 day early. So you can watch this tomorrow. If you're a channel member, everybody else will see it on Tuesday. But it is basically 5 total return ETFs making an impact. That's what I think I called it. There we go. So there we go. That's the one coming out tomorrow. So that's going to be, Tuesday. At one point in time, I used to have it just released on the same day, but I wanted to add value for the channel members. So having that 1 day early access seems like a pretty good deal for them too. So gotta love that. And this here's the big live stream event coming up on July 26th. So that's going to run from 9:15 a.m. to 4:15 p.m. And that's Eastern. That's an Eastern time. So full market day. We'll have 2 bells, one in the morning, one in the night. I think it'll be fun. I think it'll be a lot of fun. So that's coming up. And as I said as well, we also have the channel member live stream coming up this week. So you guys will be able to, I don't know yet what you're going to make me do, but it's going to be fantastic. Now, on, of course, that track, like I planned this here for the 4,000 subs. We're not there yet. We're at, let me give you guys an update here. We're at 39.94. So we're 6 away. we're 6 subs away from hitting that milestone. And then, of course, we begin the countdown to 5,000. And I got to come up. I have no clue. I don't even have a thought yet on what I'm going to do. 5,000. So we gotta figure that out. Terry says, Mountain Finance is my favorite, next to our Matt Damon and Joseph Cattleton, or is that an R? Carlton. Joseph Carlton. I'll go that. I love your shows, Candace. I do my best. Yeah, and as I said, I also put this out. I'll add this one more time. If any of you are interested in making, a quick appearance on that 7-hour show, yeah, you're absolutely more than welcome. So, I'm not going to bring anybody on for the whole show. I'm just putting that out there. So I'm not saying, hey, any of you interested in doing a 7-hour stream with me? No. But if you want to come on and say hi for 5, 10 minutes, 15 minutes, or just to have a conversation, more than welcome to. I got a lot of time to fill. But what I will say is if you're thinking about it, let me know sooner than later. So I don't, as I'm sort of scripting, because I got to sort of script the time, what I'm going to do. But I think we'll have a lot of fun, and we'll do, we'll probably do a bit of everything during that stream. That's going to be, it's going to be so much fun. I can't wait. Like, I kind of wish it was this week. But it's next week. So that'll be fun. Amvas says, after you shared about in your younger years, a tree fell on your trailer. Yes, absolutely. Thankfully, you were all right. Thought of container home living, but also come across international communities. Yeah, I mean, it really boils down to what you want to do. Like, there's a lot of, you can get mini homes now that are pretty small, but they're pretty functional. Like, I've watched some of these on YouTube where you have this home, it's really small, but it's almost like a transformer on the inside, like your bedroom when you get up in the morning. Things go up into walls and other things come out. Next thing you know, it's a living room. So it's like, whoa. So you could really, if you want to live frugally, like, you probably can't have a lot of stuff, but there's a lot of really neat concepts out there. And I also think when it comes to trailers, I think trailers are fine. It's just, that happened to be dumb luck that the trailer that my family lived in, a tree fell on that trailer like about a week after we moved out, totaled the trailer. But it would have been devastating if we'd still been living there. But I think for the most part, unless you're living in, if you're living on the prairies where there's a lot of tornadoes, well, maybe, but it depends. Even here, the chances of you running into a tornado are pretty small. If you lived perhaps in Tornado Alley in the States, you might have a better chance of running into a tornado or a tornado running into you type thing. But, the big thing is location is kind of the big thing with a trailer. Like, if you want to move into a trailer park, you're fine. You're probably fine. Most cases, other than, they're probably louder at night and then, but it depends on the park. My aunt, when she got old, she actually went to a trailer park. So she sold her house, moved into a trailer park because it was a nice trailer park. So mostly a lot of seniors were in the trailers, and I think they all got along really, really well. So something to keep in mind. All right, guys, I think we're coming up to the end. So we only got the one super. So it looks like we won't have an open tomorrow, but I'll give you guys another opportunity because I definitely would like to see an open happen before we get to the live stream, because I got little plans and things, and it'd be nice to work those out. But we'll figure it out. In the meantime, guys, have a fantastic Sunday. Watch the markets tomorrow. It should be an interesting start to the market for sure. So I know I can't wait. Let's take a look. Let's take a look at that Bitcoin one last time here. Uh-oh. Looks like the run's over. We got ourselves a red candle coming down here. But it would be nice if it can hold the 60,000 overnight, at the very least. So we'll have to see. Now, mind you, it could easily still turn around and go back up again anyway. So we'll have to see. Oh, I can't say goodbye without being big screened again. So we'll do it, and we'll try to end the stream with it actually ending. So many times I get these false endings, and I don't know what it is. Sometimes I'll click on the end button, and StreamYard just doesn't seem to register it, and then next thing you know, it goes back to being live, and I'm like, what? So we gotta go. We gotta go with whatever it does. Thank you. And Terry says, I got a mini home and one as a rental. Love it. There we go. So that's not a bad idea. All right, everybody. I think I'm done until tomorrow. Or not tomorrow. Until Wednesday. We'll be back here Wednesday with another market close. We will have an opportunity for a market open from that one. Maybe we'll do, maybe we'll give you the opportunity for both a market open and a market close on that one. We'll have to see. We'll have to see. Anyway, until Wednesday, enjoy the video coming out tomorrow for channel members, Tuesday for everybody else. Until then, have a fantastic week. We'll talk to you guys later. Bye-bye.